Welcome today to the Daily Market Wrap for Thursday, the 6th of August. Jack, a few big announcements coming in overnight. President Trump preparing new trade measure tariffs on imported polysilicon used in semiconductor manufacturing. Tell us a bit about that.
Yeah, again, this is more trade posturing out of the US, driven by the president. So he's looking to impose some more tariffs, this time on polysilicon, which is, like Chris alluded to, used in manufacturing in the US, primarily for semiconductors and solar panels. China is the big exporter of this in the global scale. So, as is always the case, the big superpowers are trying to posture with each other, reduce reliance on each other, and as has been his big mandate the last couple of years, it's boost US manufacturing. So the tariff is looking to be about 15%. Analysts expect it could get up to 30%, but yeah, that's currently in the works.
And employment data in the US, so new jobs being listed came out a lot softer than expected.
Yep, so the ADP employment change looks at the private sector, and it's a survey of private companies. They look at how many jobs were added for the previous month. They were expecting to get 70,000 new jobs added, which was already a drop from June. However, the actual numbers came out to be about half that at 40,000, obviously softer than people were expecting. And this is has a bearish effect on the US dollar, as more people working gives more people higher incomes, which means they've got more discretionary spending, which sort of boosts the economy and raises inflation. So it sort of all has a flow-on effect. So when there's less people with money, there's less spending, which means there's less inflation pressure, which weakens the US dollar.
And I think these next two, I don't think, I think some people are not particularly surprised by these results. So a couple of big stock tech companies, so SpaceX in particular, large drop after their results coming out. I think a lot of people thought they were overvalued from the start.
Yeah, definitely. I think the hype sort of got in the way of reality regarding these two, SpaceX in particular, obviously. AMD posted solid results, but people were expecting them to sort of be raking in the money, and they sort of missed the mark with that for a company that's got a 60 times PE valuation at the moment. Obviously big expectations with that, so that missed the mark and dropped off significantly. And then SpaceX, no surprise, it sort of keeps dropping down. It's now well below its IPO share listing price points, and primarily this was their expenditure on their AI build out. They raised it 6 times year on year, which, as we've seen the last couple of weeks, the market is really against. So two big drops, like you said, not overly surprising.
And over in Australia today, so we've got this morning Australian trade balance coming out. What are we expecting for these results?
Yeah, I mean, traditionally, like we've spoken about, Australia's got a positive trade balance because we're a big mining country. We export a lot of that. That's how we make a lot of our money. So our trade balance is our exports, the money we make from exports minus the money we give out for imports. Traditionally, we've operated in a surplus. However, we saw last month a surprise drop into the negative territory, and we're expecting to claw that back a bit this month. Obviously, a positive result in that aspect will be positive for the Aussie dollar as well.
And retail sales over in Europe, so expected to drop a little bit, and any results coming out lower than that is going to weaken the euro. Yeah,
so basically retail sales just looks at what people, discretionary spending again, people going to shops and purchasing things in the Eurozone, obviously a large economy in the global scheme of things, looking at a slight softening there. Again, if softening means less people spending money, less inflationary pressure. So again, if it drops further than we're expecting to see today, so at that 1% level, then the euro will weaken a bit.
The big one, non-farm payrolls coming out later tomorrow.
Yeah, so last night's ADP employment change looks at the private sector and is normally a precursor to the big release, which is the US Non-Farm Payrolls, which is a government-produced data point looking at both public and private, minus military, private households, and farmers and agriculture. So it gives a broad and complete snapshot of the employment sector in America. So we saw a surprise softening with the ADP data. Does that lead into the US non-farm payrolls? That's going to be a really key event that traders are going to be looking for tomorrow.
And some big moves overnight. So gold that's sort of been gradually coming off its high over the last sort of 6 months. A $200 odd dollar move overnight. Yeah,
we saw a big jump up in gold yesterday. One of the bigger moves it's had of recent times, been the last couple of weeks. There was no sort of major catalyst for it. It was sort of a bunch of little things. It's broken above its 50-day moving average, which was acting as a bit of a price cap on it. So that's given it some support and help this rally. The softer US dollar out of the employment data we saw helps gold. The easing US-Iran tensions for the time being is also helping gold. So it's sort of a combination of a few little things.
Yeah, so I think typically with gold, a $30 to $40 movement is kind of typically what we see day to day. So to go sort of 200 plus is quite significant. And the Nasdaq just coming down a bit, likely off the back of those big tech announcements. Yeah,
it was basically the market taking a bit of a breather. We saw those after hours earning reports from AMD and SpaceX. We just talk about were negative. However, the market sort of just took a bit of a breather. Probably took a bit of profit taking after some record highs we've seen this week. So yeah, nothing major, more a consolidation than anything else.
And the dollar CAD, bit of a drop off last night. Can you tell us a bit about this?
Yeah, again, this is more points to the dollar weakening off that surprise employment data. So this is sort of what effect these data releases can have on currencies and other assets. It wasn't as big with the dollar CAD because the CAD's obviously really tied to oil. So as oil prices are still sort of heading lower, they've sort of stabilised a little bit, but still heading lower. The Canadian dollar will get strength off that. However, that's sort of staying flat. So the driver of this was the US dollar softening off that surprise US jobs data. If we see non-farm payrolls tomorrow coming softer than expected, this will drop down even further.
And the VIX has done a little bit of a yo-yo here off the back of getting down to 16.
Yep.
Why do we see this coming back up off the back of some seemingly positive announcements coming out of the US in regards to the conflict?
Yeah, I guess the important thing to note about this is while there was a bit of movement yesterday and increased volatility, looking at the overall level of where it's at, sitting around that 17 mark, it's below the 20 to 30 range we look at when we start seeing more risk in the market, more uncertainty, more fear. So while there was movement yesterday, it's still sitting well below that level, which means it's pretty stable for the time being. Again, I think it was the jobs data, those poor results out of a couple of big companies in the US that sort of provided a bit of movement, but in the grand scheme of things, it's still at a pretty comfortable level.
And the chart of the day. Tell us about the Japan 225.
Yeah, we've been seeing the Nasdaq, the S&P, the Dow Jones have some really strong earning power this last little short term. And looking over at the Japan, this is the Japan stock market, their index, looking at their 225 top 225 companies. It was rallying from May up until June when it hit a high of around 73,000. And since then, it's been on that steady decline through that pink channel. But what we've seen over the last day or so is it's now broken through that channel. It's broken through the 50 and 100 period moving averages, and it was working towards that 200 period moving average, that long-term moving average. That's now acting as a little bit of a cap, so we've seen it come through there. But now that top of that descending channel should act as a bit of support now. So we'll see how it plays out over the next few days. But it was interesting to see that in that original rally, that 200-day average was acting as that key support level and sort of helping lift the price up. Whereas now it's going to act as that resistance level. So moving averages are really crucial to look at, as they once the price breaks through, it'll flip the behaviour of the moving average between support and resistance, and conversely resistance and support.
And the article of the day here, so just one about the SpaceX falls on the back of those announcements.
Yeah, just one of everyone's favourite company, just having a look at what's happened recently, what the earnings results mean. I think there's also going to be a big movement in shares later this week. I think some of those vesting options expire now and people can start selling shares within the company. So yeah, I think there's still a fair bit of movement in the share price ahead.